morning, traders. Welcome to the DOS Trader Morning Call video for Monday, December 7th. Well, we get a nice little push up here. You can see this on the Spiders, the SPY on Friday. We took out the high on Thursday's massive sell-off. So we took all of that back, and we had a nice big move to the upside. So a nice day. Algorithms really took it in gear, and shorts covered big time. And that's really behind that move. I don't think there was some really, really good buying in it at all. We're into this major area of resistance here, guys, and we need some sort of a catalyst either to push us higher, or I think the markets are going to head lower. And that's, I do see, if you let's go into that DOS Trader, you could just see right here what we're looking at. We have a nice little M formation as well, and then we have this little uptrend channel here. So we're going to need to see some sort of a movement here, and it could even actually, there you go, right there, nice big uptrend channel. As long as this channel stays intact, guys, we can move higher. I don't want you to think that we're looking to get short here. However, we are coming into tax selling period, which we have 2 weeks between now and next week, some seasonal weakness before we get a kickoff into the so-called Santa Claus rally, if we didn't get it already back in October, okay? So keep the pallets dry, reduce the share size, and make sure you guys know where your stops are, because it's really important, especially the volatility will be picking up. Now, we do have a little bit of movement in the crude oil, which we're down about 3.5%, almost 3.5% in crude. Why do I mention that? Because the S&P is heavily weighted in oil stocks. That may hinder any type of additional movement that we're kind of build from Friday. So I would not be surprised if we get a little move lower in equities today because of the oil. Now, speaking of commodities, right, I want to just show you a couple things here. And let's just get right to here's the GLD. Now, we have a nice movement in GLD, which is the tracking ETF for gold. Big move on Friday, again, due to non-farm payrolls and, again, shorts carbon. This is heavily shorted. It's been working for quite some time, for the last couple of years, as you can see here on a daily chart. Do I think that gold goes higher? I do, but I don't think that it just goes right straight up. I'm looking for the pullback, and I mentioned this to you guys many times in the video. I'm looking for a pullback to fill this little gap, and then let's see if we can base build again a little bit more, and then either we take out the base building or we break par in the GLD, and the GC contract, which is the futures for gold, we break 1,000. So that's what I'm looking for. I do think that we get lower, and the target's somewhere around 985 to 990, where I'll really start to nibble in the gold contract, okay? But I do think that gold does go a little bit lower before it goes higher. All right, let's take a look at the USO, which is the tracking ETF for oil. Now, this is end of day close, so you're going to see this take out the low for 2015, and I do think oil goes lower. Had a bunch of emails. Mark, what do you think the oil is going? No one really knows. But you know what? It would entice me if it get into the low 30s, and then see where it goes from there, if we can base build a little bit. And then I'm not looking to catch a falling knife at all in any way. You could see that this is clearly in a downtrend, and I really hate buying anything in a downtrend. But when it gets extreme, that's when you just want to start looking at it, okay? And we'll get into this a little bit more too as well. But I just wanted to point out why I think the markets may be have a little problem today because of the oil. Oil stocks are really getting decimated right now. All right, IWM, the canary in the coal mine. We keep saying the Russell and the transports. Well, the Russell, if you remember, the Spiders took out Thursday's high, right, and all of the gains. Well, why didn't the IWM, which is one of our leaders, did not? Okay, so that's why I'm suspect of any rally right now until I see the Russell and the transports either break to the upside and follow suit with the other indices that are lagging indexes, such as the Dow and the S&P, or we start to roll over again. And that's why I think that the markets are still in trouble until this divergence either gets alleviated or kicks in. Now we have the movement here in the transports, which broke this big symmetrical triangle, and now back testing. So not a good sign, guys, okay? I just want you guys to be aware of what's happening here. This is definitely not a good sign. We have market divergence, and divergence could stay that way for quite some time. But I do think in 2016 we may have a little problem in January. If this so-called Santa Claus rally starts to kick in, then I think that the markets will move higher and can move higher. Okay? Play the direction of the trend, bottom line. Have a great day, everyone. We'll speak to you tomorrow. Take care.